Gautam Adani, a name synonymous with ambition, wealth, and now controversy. The Adani Group, a sprawling conglomerate with interests in ports, power, and infrastructure, rose meteorically, becoming a symbol of India's economic prowess. But behind the glittering facade lay a darker truth, one that began to unravel with the explosive revelations of financial malfeasance. Hindenburg Research, a firm specializing in forensic financial research, dropped a bombshell report in January 2023. It accused the Adani Group of engaging in a brazen stock manipulation scheme, inflating its market value through a network of offshore shell companies. These entities, shrouded in secrecy, allegedly traded Adani stock, creating an illusion of demand and driving up prices. The report sent shockwaves through the Indian stock market. Adani shares plummeted, wiping out billions of dollars in market value. Investors were left reeling, questioning the integrity of one of India's largest conglomerates. The scandal raised serious questions about corporate governance, regulatory oversight, and the role of powerful players in shaping India's economic landscape. The Hindenburg report, meticulously researched and backed by credible evidence, could not be easily dismissed. It pointed to a systemic problem, a rot that seemed to have seeped into the very heart of India's financial system. The question on everyone's mind was simple yet profound. Would anyone be held accountable? The intricate web of offshore entities, primarily based in the tax haven of Mauritius, became a focal point of the Adani scandal. These shell companies, with opaque ownership structures and little to no actual business operations, served as conduits for moving vast sums of money. Hindenburg's investigation, corroborated by independent media outlets, revealed a pattern of suspicious transactions. Funds flowed through these Mauritian entities, often disguised as foreign investment, and were allegedly used to artificially inflate Adani stock prices. The complex web of transactions made it difficult to track the ultimate beneficiaries, but the trail always seemed to lead back to the Adani family. The use of such offshore havens is a common tactic employed by those seeking to evade taxes, launder money, and obscure the origins of their wealth. The Adani case highlighted the urgent need for greater transparency in financial transactions and stricter regulations to combat the misuse of offshore entities. The revelations about Adani's alleged use of offshore havens shook the confidence of foreign investors who had poured billions into India's booming economy. The scandal cast a long shadow over India's image as an emerging market leader, raising concerns about the effectiveness of its regulatory framework and its commitment to tackling financial crime. The Securities and Exchange Board of India, SEBI, the country's stock market regulator, faced intense scrutiny following the Hindenburg revelations. As the watchdog responsible for ensuring fair and transparent markets, SEBI's response to the Adani scandal was widely seen as inadequate. Despite the gravity of the allegations and mounting pressure from opposition lawmakers, SEBI's initial response was slow and underwhelming. It launched an investigation, but its pace was glacial and its findings remained shrouded in secrecy. The regulator's seeming reluctance to take decisive action fueled suspicions of a cover-up, raising questions about its independence and its ability to hold powerful entities accountable. Adding to the controversy, SEBI had reportedly given Adani a clean chit in the past, dismissing earlier allegations of wrongdoing. This history of inaction, coupled with the regulator's tepid response to the Hindenburg report, led many to believe that SEBI was either unwilling or unable to effectively regulate the Adani Group. SEBI's lack of decisive action had far-reaching consequences. It eroded investor confidence, damaged the reputation of India's financial markets, and emboldened other corporate actors to engage in unethical or illegal practices. The regulator's failure to act decisively in the Adani case served as a stark reminder of the urgent need for reform within India's regulatory institutions. Our Section 4, the bucks entangled in the web. As if the Adani scandal weren't already convoluted enough, a new revelation added another layer of intrigue and raised further questions about potential conflicts of interest at the highest levels of India's regulatory system. Hindenburg Research, in a subsequent report, alleged that Madhabi Puri Buch, the chairperson of SEBI, and her husband Dhaval Buch had indirect financial ties to the Adani Group. The report claimed that the Buchs held investments in offshore funds that had also invested in Adani companies. While the extent of these investments and the nature of the alleged connection remained unclear, the mere suggestion of a link between the SEBI chairperson and the Adani Group sent shockwaves through India's financial circles. The allegations, if true, would represent a serious conflict of interest, casting doubt on SEBI's impartiality and its ability to conduct a fair and unbiased investigation into the Adani Group. The allegations against the books, coming on the heels of SEBI's already questionable handling of the Adani case, further eroded public trust in the regulatory body. The revelations fueled calls for Madhabi Puri Buch's recusal from the Adani investigation and a thorough, independent probe into her alleged financial ties to the conglomerate. Section 5. A crisis of confidence. The Adani scandal, with its intricate web of offshore entities, alleged stock manipulation and potential regulatory capture, exposed a deep-seated crisis of confidence in India's corporate governance and regulatory framework. The scandal shook the very foundations of India's economic aspirations, raising serious questions about the country's commitment to transparency, accountability, and the rule of law. The scandal's fallout was felt far beyond the confines of the stock market. It tarnished India's image as an attractive investment destination, spooked foreign investors, and eroded public trust in the country's institutions. The allegations of regulatory capture, if proven true, would indicate a systemic rot within India's regulatory bodies, suggesting that they are more beholden to powerful corporate interests than to their mandate of protecting investors and upholding market integrity. The Adani scandal served as a wake-up call, exposing the vulnerabilities of India's economic system and the urgent need for comprehensive reforms. It underscored the importance of strengthening corporate governance, ensuring regulatory independence, and fostering a culture of transparency and accountability. Failure to address these systemic issues would have far-reaching consequences, jeopardizing India's economic future and its standing in the global arena. Section 6. Restoring Trust, a call for action. The Adani scandal presented a defining moment for India. It was a test of the country's institutions, its commitment to the rule of law, and its willingness to hold the powerful accountable. The way forward demanded decisive action, not just to address the immediate crisis, but to prevent similar scandals from erupting in the future. A thorough, independent investigation into the Adani Group's dealings was paramount. Such an investigation, conducted transparently and without fear or favor, was essential to uncover the truth, hold those responsible accountable, and restore public trust in India's financial system. Equally important was the need for comprehensive reforms aimed at strengthening corporate governance, ensuring regulatory independence, and promoting transparency in financial transactions. This included tightening regulations on offshore entities, enhancing SEBI's powers and resources, and establishing clear mechanisms for whistleblowers to report wrongdoing without fear of reprisal. The Adani scandal presented India with a choice: to succumb to crony capitalism and regulatory capture, or to emerge as a beacon of transparency and accountability. The path chosen would have profound implications for India's economic future, its standing in the world, and its ability to fulfill its promise as a global leader.